Hi everyone, I am Adam from Trade with Precision and welcome to IC Markets Market Commentary. First of all, let's kick off with this dollar index. I want you to just have a look here from a monthly perspective. We have been stuck in this range for almost a year, just shy of a year, but we are right at the top of this major level. $100 is a very historically significant level, and we're sitting right at it. If we have a look from a weekly perspective, we have this very nice bullish close right into the finish at this level just above it. So there's a lot of motivation. We have to get past this level, but the dollar finished the week strong, and we could very well see follow through. If we go to the daily here, that's what I'm going to be looking for here. We could very well see follow through. I'm not saying it's going to happen. The trick with ranges is that until you get out of them, you are still in them. So I need to see this close. I want to see a breakout, and if it does, we've pretty much got a free run up to 101. That's what I'm going to be looking for this week. Where it gets interesting, we have a look at euro dollar. You can see quite a bit of pressure here, closing under that 50 period. Nice bearish candle here. I think we have further downside here, back down towards 1.14 at the very least. We've got dollar yen also here. Now, historically, this 160 level is very significant. If we go all the way back, once we break through this, you don't really get above this until you go all the way back to 1990. And once you break through that, there's a good run all the way up until 1.78. I think it is 178. And that's all the way back in the 70s. So there's a lot of pressure here. There's a lot of pressure for Bank of Japan to defend this, but I think we're going to see a stronger, it's not a coincidence that we're sitting at these key levels. And this week, a stronger dollar could see a break and a run for dollar yen. We could really see that happen. And that means that we could see some big movements on the dollar this week. Now, as I said, that's what I'm looking for. We've also got big jobs numbers out. We've got US jobs data coming out. We've got non-farm payroll, ADP, unemployment. We've got a lot of stuff this week that could nudge the dollar in either direction. So just please be very, very careful. But it's interesting to me that if we do break above this, we could see a bit of a run. We would suddenly see a lot of the majors weaken against the US dollar. We're not there yet. It is right at the level, so we have to see which way it's going to go. So it's that big fork in the road. Let's have a look at gold. So gold not really offering a lot of clarity over the last week, sort of 5 days, largely sideways. For the moment, I'm leaning still bearish at this point in time, but this level of 4,350, 4,375 is still holding at this point in time. So I'm going to keep an eye on that. I'm going to stay away from it. Silver, on the other hand, is interesting to me. It does have my attention. Really, when I go down to the 4 hourly, what's curious about this is we've got potentially a very messy version of an inverse head and shoulders. And I think the level that I want to watch here this week is going to be that $74.50, $74.50, because there is a small possibility at this time, because it's early days, that we are going to see an ascending triangle form here, which means we could this week see a potential silver climb up to the top. But it has to get above this 50 period. And also, that whole idea is negated if we ultimately break below this low. So if we break below this trend line here, we break below this isn't really a trend line so much as it is a line in the sand. If we ultimately end up forming an inverse head and shoulders, we will continue to go higher this week, which means it'll stay above this level. But instead, if what it does is immediately breach that line and break below these lows, then this whole bullish setup is negated. What I do find interesting about this is if we start to see this starting to build up to the upside, I'd be very surprised if gold isn't doing the same thing. So I'm going to be watching this as a starting point, but then I'll be going back to gold to see what gold is up to. So we could end up actually with gold and silver heading up a little bit higher. It's in that little sweet spot where you have to wait a little bit longer to get a bit more clarity on what it's going to do. Crude oil, ladies and gentlemen, is my favorite contender for a potential high probability trade setup this week. We've got a very nice level of resistance. And again, we have an ascending bullish triangle forming here, but also look at the 50, 20, and 10 moving average geometry in a nice bullish formation. And so the pressure is building up. Will it break through this week immediately? Will we see it break through and head up? It's got a good clear run all the way up to 119. That could be the case. What I would prefer to see again is to see a bit more pressure building up in here and see a stronger breakout. But this is certainly on my watch list this week. I like the look of this so far. Now, we get to the global markets. First of all, I just want to say something here. This is the Dow. So far, despite the heavy sell-off, it has only pulled back 382, all right? That means it's done the minimum pullback as part of a healthy retracement. It looks much better when you look at it from a monthly perspective, back into the moving averages. There's a previous level of resistance, and it might find support here, granted. So that's why this week, that's a very bearish close. If we just zoom in, that's a very bearish candle closing below the moving averages here. So I would think it's a fair possibility this level may not hold, and we could see a further correction to the downside. But what I'm trying to say here is, although there's heavy selling pressure, we're sitting at a key level. This week could be very interesting, but I do think it's likely that for the month of March, because we're only 1 or 2 days away, we're going to see this close lower. But just keep an eye on this. Also, just as bad as a lot of people think the markets are, it really has only pulled back the minimum amount. So we do need some perspective on that. If we have a look at the S&P. Same thing again, it hasn't even reached its 382, the previous level of resistance. It still has further downside potential, and it would still be a healthy retracement. So I'm just trying to put some perspective in here, but from a weekly perspective, no arguing. Very bearish candle, stuck below that 50 period, very bearish close. So yes, further downside to me this week. If we break the low here, it makes sense to me that the market will attempt to work its way down towards that $6,100 level. So I'm going to exercise some cautious bearishness this week. Keep in mind that the further down we head, the closer we get to buyers wanting to get back into the market. We've got the tech stocks, all right? So we've broken through a level of support, no doubt. We've got a very bearish close on the candle. We're below the 50 period. The momentum is bearish at this point in time. Let's go to that monthly, get some perspective on this again, measure from the lows to the highs, and you'll see that we also have not hit the 382 here, which is also a potential level of resistance. So again, further downside would actually make sense. Russell 2000 are not too concerned about for the time being. The FTSE is also closed with a little bit of a green candle. So it's not as heavy a sell-off when you leave the US. It doesn't really look as bad. There's definitely downward pressure, but it's not heavily bearish in the same way. And then finally, just wrapping up here on Bitcoin, really just noticing that we tend to drop through this sloping trend line, which is kind of a bit more of a bear channel. And so Bitcoin is going to be under a lot of pressure. It's probably going to get pushed down towards 63 or 62,000 this week. That's what I'm looking at. I'm going to leave you with that. Have a great week.